Ladies and gentlemen, good day and welcome to the Muthoot Finance Limited Q3 FY24 earnings conference call hosted by Nirmal Bang Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Rati Pandit from Nirmal Bang Institutional Equities. Thank you, and over to you, ma'am.
Yes, sir. Thank you, Zico. A very good evening to everyone. On behalf of Nirmal Bang Institutional Equities, we welcome you all to the Q3 FY24 earnings conference call of Muthoot Finance Limited. We are pleased to host the senior management of the company represented by Mr. George Alexander Muthoot, Managing Director, Mr. Alexander George, Whole-time Director, Mr. George M. Alexander, Whole-time Director, Mr. George M. George, Whole-time Director, Mr. George M. Jacob, Whole-time Director, Mr. Epen Alexander, Executive Director, Mr. K.R. Bijimon, Executive Director, and Mr. Omin K. Mamen, Chief Financial Officer. I now hand over the call to MD Sir, Mr. George Alexander Muthoot, for his opening remarks, post which we can have the floor open for Q&A. Thank you, and over to you, sir.
Good evening to all of you. This is George Alexander Muthoot, Managing Director. Thank you for all participating in this conference call. We just concluded our board meeting, and most of the directors are here in this room itself. And performance highlights for the 9 months. The 9 months which ended in December 31st, we have an increase in the consolidated loan AUM of 27% year-on-year, which now stands at 82,773 crores. As far as the standalone loan assets under management, it has grown by 23% and stands at 71,182 crores. The gold loan AUM has also increased 22% year-on-year, increased by 12,397 crores. The consolidated profit after tax has also increased by 23% year-on-year and now stands at 3,285 crores for the 9-month period. The standalone profit after tax has also increased 16% year-on-year and for the 9 months stands at 2,993 crores. As far as the subsidiaries are concerned, Belstar has an increase in AUM at 65% year-on-year and which now stands at 88,835. The loan disbursement has also been, for the year-on-year, it has gone up by 85% and it stands at 6,776 crores. The profit after tax has shown an increase of 382% year-on-year, which now stands at 235 crores for the 9-month period. Muthoot Home Finance has an increase in loan assets under management of 26% year-on-year and now stands at 1,783 crores. The loan disbursement has also increased by 493 crores. There is an increase in the profit after tax, which now for 13 crores for the 9-month period. Muthoot Money has shown an increase in the loan assets under management 179% year-on-year, which now stands at 818 crores. The total revenue has also gone up to 82 crores and the profit after tax is rupees 3 crores as against a loss of 3 crores last year. Asia Asset Finance, the Sri Lankan subsidiary, has shown an increase in profit after tax and now stands at Sri Lankan rupees 9.7 crores and the branch network has also increased to 80%. We have opened 487 new branches by the group in the 9-month period. We have raised 480 crores through 33rd public issue of secured redeemable non-convertible debentures this quarter, and we have also received, the company and the group has received multiple industry recognitions too in this period. I think with that, in opening remarks, I would like to conclude here and open it for question and answers and clarifications.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rajiv Mehta from Yes Securities. Please go ahead.
Yeah, hi, good evening. Congratulations on a good performance. So my first question is on gold loan yields. So there is a marginal uptick of 15 basis points on sequential basis. So is it completely driven by NPL reduction, or is there any positive impact of some change in customer segment mix or any product rate increases taken in the quarter?
Being a short-term loan, it is quite usual for such fluctuations. If you see,
it's not a substantial fluctuation. Just as you said, it's only you said 15 basis points.
Okay. And could you share the quantum of auctions and quantum of settlements done in the quarter?
Auctions will be about 360 crores for the quarter. 381 crores.
381 crores for the quarter.
And any settlements that we would have,
We don't do any settlements.
Okay. And just last thing, we see a slight dip in new customer addition and old customer reactivation on sequential basis. That number is slightly dipped in this quarter. I see that as a seasonal feature also. But is it also the impact of the reduced advertisement and publicity expenses in the quarter?
No, I don't think it is because of that. Some of these things are seasonal also, but there has been an increase in customer addition. But probably, as you said,
again, the number is not that significant. September quarter, the number was 360,000. This quarter, it is 334. So it's quite usual when there is a huge churn in the portfolio. So we deal with about 55 lakh customers. So it is quite usual for such fluctuations.
Okay. Thank you so much for answering my questions and best of luck.
Thank you. The next question is from the line of Mona Ketan from Dolat Capital. Please go ahead.
Yeah, hi sir, good evening. So firstly, just referring to the ARC sale we had last quarter. So you had mentioned about some, 200 to 300 crores of recoveries during Q3 itself when the last call happened. So where does it reflect in the P&L?
So, when we do an ARC sale, we invest in a security receipt in the proportion of 85 and 15%. So the amount we invested in security receipt, it's coming as a part of investments.
Okay. So the recoveries that you had will now be reflected in in interest income as.
No, in the investments. It comes as a reduction in the investments, and when it is completely exhausted, it comes as an income.
What we get more than the investment will come as interest.
Okay, it will come in the interest income. So some of it is reflected in the interest income itself.
No, that's not what we said. So when the security receipt completely becomes zero, whatever we get over and above the security receipt, we can treat it as an income. Till that time, we cannot treat this as an income.
Okay. So we have not had any income from that in this quarter, or how?
Correct.
Yes.
You are right.
But is anything expected in the coming quarters or something?
Definitely.
We have around 280 crores outstanding. We hope to recover that in this quarter. If it is completely recovered, then probably we might see an income. Otherwise, it might come in the first quarter of next year.
Got it. That's clear. Okay. Because limited amount was recovered, it could not be, only the deduction has happened from investment book.
Correct.
And no benefits in the P&L.
Yeah.
Sure. Got that. Secondly, can you share the breakup of your loan book based on ticket size, less than 1 lakh and above 3 lakhs?
So there's not material change in the proportion. I think above 3 lakhs continues to be 27%. Between 1 lakh and 3 lakh continues to be 38%. And the rest, 35%, is less than 1 lakh.
Got that. Okay. And just one more thing. So, if I have to understand the attrition levels at Muthoot, could you give some color as to what is it today and what was it, say, a few years back, maybe 3 to 4 years back? Thank you. That's all from my side.
So attrition maybe after the COVID, etc., or during the COVID, attrition is high. Prior to that, it was low. Now I think we are almost getting back to the pre-COVID level.
Okay, got that. So it's back to the normalized levels pre-COVID.
Yeah, almost not. Almost.
Got that, sir. Thank you so much. I'll come back in the queue.
Thank you.
Thank you. The next question is from the line of Abhijit Tibrol from Motilal Oswal. Please go ahead.
Yeah, thank you so much, sir. Congratulations on good results. So first question on this ARC sale transaction that you've done. In the notes to your financial statements, you have said that the outstanding value of the SR receipts have declined from 595 crores last quarter to about 228 or 230 crores as on December. So if you could just explain, I mean, how is this working? I mean, essentially, when the ARC goes ahead and does the auctions, or when you do the auctions, it will reflect as a decline in the SR receipts, is it?
Yeah. So the collections we get, goes to reduce the SRs, and finally, when the SRs becomes zero, any amount collected after that becomes an income for us. But the collections are not actually coming through auctions. Primarily, it is coming through repayment of loans by customers.
Yes, not through auctions.
Got it. So this decline from 595 crores of SRs last quarter to about 230 crores of SR as on December is predominantly coming from collections or basically customers coming and repaying their loans.
Yes, it is predominantly done to help the customers, to give them little more time to redeem their gold. Now, as you said, 200 crores of customers came back, redeemed their gold, and they were saved from auction. That's the biggest advantage of the ARC transaction. Otherwise, we should have had to auction those gold. So customers are definitely happy, very much benefited also. Yes, please.
So like you said, whenever this outstanding SR receipts become zero, at that point in time, whatever extra is collected will be classified as income, because from what I recall, this ARC transaction last quarter was done at par, so you had received the entire principal.
Yes.
Got it. And sir, one more question that I had was on the borrowing cost. This quarter around, given that you had also raised from public NCD, I think, the cost of borrowings have not gone up, but otherwise, this risk-weight circular that came in, most of the other gold lenders seem to suggest that banks are reaching out and increasing the cost, the lending rates, at least on the incremental lending that they are doing. This quarter, I see our bank term loans have actually declined sequentially, so maybe it's not impacted as much. Going forward, how are you looking at cost of borrowings, particularly, borrowings from banks?
So right now the borrowing cost, as of December quarter, it is around 8.55. I think we are more heading towards 9. So probably in the next 6 months, I think we might see moving towards 9 unless there is some declines happening in the general interest rate scenario.
Got it. Essentially, bank borrowing cost can convert from 8.55 now towards 9%, which is the incremental cost of borrowing.
Yeah, but it can happen and maybe only over the next 3 to 4 months.
Got it. And so my last question was again on Belstar. I mean, very good growth, very strong growth, I would say, that we are seeing in Belstar today. So two things, I mean, looking at the environment today, I mean, are you not a little anxious about such strong growth, 65% kind of a YOY growth, not on a very small base? That is the first part of the question. And the other one is, I mean, last maybe 4 quarters, you were seeing a continuous improvement in asset quality. This time there's a minor deterioration of about 40 basis points sequentially. So any geographies where you've seen this deterioration in asset quality?
No, I think, our base was low. That is why you see the higher percentage, etc. Compared to the total balance sheet size or asset size of Muthoot Finance, the Belstar investment or Belstar loans are not significant for us. So not that significant. The 65% is because the base was
branches.
They have opened branches. As far as the NPA is concerned, we have not seen any particular geography where something is wrong. This is just part of 0.4% this way or that way will definitely keep on happening.
Got it, sir. This is useful. Got it, sir. This is useful. Thank you so much, sir. All the very best.
Thank you. The next question is from the line of Shubhranshu Mishra from Phillip Capital. Please go ahead.
Good evening, sir. Thank you.
Sorry to interrupt, sir. May I request you to use your handset, sir? You're not audible, sir.
I'm on my handset.
That's better. Yeah.
Right.
Go forward.
Thank you for the opportunity. The first question is around the loan book proportion. You gave out what is less than 1 lakh, but within that, what is less than 50,000? That's the first question. Second is, what is the accrued interest? Third is, in the PPT, sir, I saw that we do use Paytm as our payment services for loan repayment. I know we are using other fintech companies also, but what is our dependence on Paytm? And do we plan to stop it or alter that relationship, sir? Thanks.
Just I forgot the first one. Can you just remind the first one?
What is the proportion of AUM less than 50,000, sir?
16%.
Okay, sir.
Okay. The second one was Paytm.
No.
Paytm, we also have, among others, Paytm also. I don't think it is impacting.
No. We don't have any impact.
I don't think we are, depending on any technology significantly.
We are not depending on this Paytm.
We don't have any impact on that Paytm.
What was another question you asked?
Accrued interest, sir?
1,921.
1,921.
1,921, sir.
Yes.
Sure, sir. Thank you.
Thank you. The next question is from the line of Raghav Garg from Ambit Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just 2 questions from my side. One is, we've seen that there has been a lot of chatter about stress increasing in small ticket personal loans. Are you witnessing any such trends where customers who may have taken such loans are now coming back because they aren't able to get those unsecured loans anymore as easily as before? Should I ask my other questions or?
Yeah. Just because they're not getting a personal loan, we don't see any significant offtake of the gold loan. That's not. Is that what you meant?
Yes, that's what I meant. So generally, what we see is
that probably we have to wait some more time. If it is really going to dry up, like during the COVID, then there will be a big demand. During COVID, personal loans, etc., initially dried up fully. So we had a good demand for gold loan at that time. Probably we'll have to wait for some more time. If it is really drying up, then people will come with gold. More people will come with gold. Okay.
Understood. Second question is, cash and investment has been increasing. So I see that in Q1 as percentage of borrowings, that was, I think, 10-12%. Then 16% in Q2 has increased to about 18%. What is the comfortable level that you would like to keep? And would you also look to utilize some of this balance for growth in the next quarter, or would you borrow more?
No, I think a certain percentage, I have always been saying that you keep a certain percentage of cash and cash, etc. Because we are definitely an NBFC. We have a large borrowing also. Our total borrowing is about around 60,000 crores. So we have to keep a good amount of cash. So probably some of it, maybe 1,000, 2,000 crores, maybe can seem to be excessive, but then it is always safer or more prudent to keep little extra cash. We know it has a negative carry, but still the carry may be 2-3% carry is there, but still it gives more comfort to us. And the final question, yes, we are seeing growth in many sectors now and keeping little more cash with us and also increasing the borrowing, not depending only on the cash. That should be our policy also. So we will continue to borrow and also continue to have maybe a little extra cash with us.
Sir, my last question, in 4Q, how are you looking at the OpEx ratios? Where I'm coming from is that typically in this quarter is when you see the management remuneration also coming into the OpEx line item. So any levers we have to mitigate that, or how would you look at?
It will be the same as of any other fourth quarter, sir. It will be the same as any other fourth quarter. Yeah.
Thank you.
Thank you. The next question is from the line of Shweta Daptardar from Elara Capital. Please go ahead.
Thank you, sir, for the opportunity and congratulations on a good quarter. So just two questions. One is, so this question was asked initially. So is my observation correct that this time you have seen a very strong gold AUM growth? Of course, it's come on a little lower base of last year, but this has come despite your LTVs dropping from 70% to 65%. So that is very commendable. But is it that reason why the new or fresh customers have dipped or the fresh renewals have not come by?
You have put too many
Questions in
not questions, too many assumptions in this. Anyway, growth has come. LTV is going low because the increase in the gold price. So whenever the gold price increases, the LTV on the book definitely will come down from 75 to 70 to 68 to 60. That's the reason for the LTV growth. Yes, new customers are coming. And what was the next thing you asked?
No, so even the fresh collateral has also dipped. So new loans by fresh collaterals.
I think when the gold price goes up, people need to bring only lesser gold for the same amount of loans.
I think tonnage remains the same, 194 tons, no?
Yeah.
Because because when the gold price goes up, the new loans, instead of bringing 50 grams, they'll bring only 48 grams.
Correct.
That's it. For the new one, and this is churning so fast that the old one, 50-gram fellow will go out and the 47-gram fellow will come inside. I think you got the point.
Right. So basically the gold price has driven the gold growth largely for this quarter.
You don't need to surmise like that. I said the tonnage difference is what I explained.
Right. Also the tonnage has been steady, right? So then how does the outlook look like in terms of competitive dynamics as on today? Because we have not seen much material improvement in yields as well. So the going looks similar fashion, like is it going to be as healthy as on today going forward?
Yeah, we had given a guidance of 15% growth for the full year for the gold loan. I think we should be able to achieve that for the whole year. I think to that extent that will be there. Competition is always there, as I have been always saying. After a while, some of these banks, etc., fatigue will set in and probably the focused players like gold loan will come back. So we have been always keeping our business focused on gold loan. We'll continue to do that, and probably we will see continued growth also in the same 15% fashion.
Right. So, and my second question is pertaining to Belstar. So, with this kind of strong growth again on the EM front, so at what IRRs are we operating? And do we see, so we have seen the top players calibrating interest rates on the MFI side, on the MFI business front. So, how are we placed on the yield front, and any such calibration we are looking forward to?
You see, the industry actually acts as a group actually. When actually as a whole, the industry has taken a decision to recalibrate the interest, and people have started doing it. We have also started doing it. What the other industries, the leaders in the industry does, just like that, we will also be doing. I think they will also be doing.
Yeah, the SRO for microfinance is very strong. Actually, they have a good control on the members, and they also instruct what to do. And I think 25 basis points.
Regulatory organization in the microfinance is quite effective and strong. So I think everybody works in tandem.
Yes.
Right, sir. That's great. Thank you so much.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Pratik Tande from Swan Capital. Please go ahead.
Congratulations on a healthy growth in your gold AUM this quarter. So my question was, can you give some guidance on the growth coming in the next few quarters, let's say FY25, 26 maybe? Also, I would like to understand on the competitive environment. So from the banks and other gold lending NBFCs, are we gaining market share from them, or we are benefiting from the sector getting slowly organized?
Yeah, you said it right. So first of all, the growth we had guided for a growth of 15% in gold loan for the full year. I think we should be able to reasonably achieve that by the end of the year. Going forward, also, all the last several years, we have always been giving guidance of 15%. I think we will continue to do that in the coming years also. The first part of the question. Second was about what was it? Second part?
Yeah. So, are we gaining market share from banks and gold lending NBFCs, or we are getting benefited from the sector getting slowly organized?
Yeah, it's not sector organized. More and more customers are now going. It's not that we are taking any customers from the bank, or bank is taking customers from us. See, the overall market for gold loan is also increasing. Definitely it's increasing because some of the banks are also, although at not the same pace, they are also growing their gold loan book. We are also growing the gold loan book. So it only means that the market is improving.
Right. Right. Thank you.
Thank you. The next question is from the line of Vikram Subramanian from MWAM. Please go ahead.
Hello. Hi, sir. Thanks for taking my question. I have a couple of questions. First on margins, specifically yields. So we've reported about close to 13-14 bps of yield expansion QOQ. But if I remember last quarter, due to ARC sale and the GNPA increase, we had interest reversal, and we had cited that as one of the reasons to have impacted yields. So is this just a reversal of that, or how should we read this, or is this the 17.5 to 17.75? Is this the new normal of yields?
No, I think, 17.5, 17.8, 18% is what we have been having yield over the last 5 quarters. So it will still be around that only. 10-15 basis bits here and there. It's just because of the short-term tenure of the book, of the loan. Very short-term tenure. So sometimes 15-20% bits can there. So last time it was 17.65, now it is 17.79. Previously it was 18.08. So some small change here and there, just because of the very short-term nature of the loans.
Fine. Got it, sir. So, my next question is on growth. Specifically on the operational parameters. So if I notice, gold price QOQ had increased about 9%. Yeah, even on an average basis, it had increased about 4% between 2Q and 3Q. Our gold loan growth is still trailing at 2.5% QOQ. And this also seems to be largely value driven, and which is what we've been having, value driven loan growth for almost the entire year. Our customer addition is still trailing at 1% or lesser. Even if I look at average ticket size of gold loans on a per loan account basis, that is up 15% YOY. So most of our growth has come from this. I look at it the other way. LTV is now down to 65%. But if I adjust for the gold price increase, the end of period increase, LTV has actually gone up to 71.5%. So almost the entirety of our gold loan growth still comes from price movement. So how should we look at this going forward? Because we seem to be completely at the vagaries of gold loan prices, what is moving us?
No, I think you have used such a lot of statistics and figures, 5, 6, 7 or 10 parameters of growth, this way, that way, etc. Anyway, our gold loan business is growing, our new customer additions is happening, the AUM has gone up, we are given a guidance of 15% for the year. I think we will touch that. Let us remain there. So many statistics and parameters and deductions and inferences we are good. I don't know which is all correct and which is not correct. Anyway, we are looking at the growth. Our interest comes from the growth. Our interest and income comes from the AUM only, not because of dispersal, etc. If our AUM grows, our interest will be higher, our profit will be higher. I think we are almost trying to stick to that, sir.
Okay, sir. So, and that's 15% growth, is it?
I think last two questions I have answered like that only, sir. Probably you were not listening.
Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Shripal Doshi from Equirus. Please go ahead.
Hi, sir. Congrats on a good quarter, and thank you for giving me the opportunity. So my first question was pertaining to the new customer acquisition run rate. So what is it that we have in mind or that we are targeting in order to add on a monthly basis in the new customer acquisition landscape?
I think we are doing a lot of road activities. We call it BTL activities. BTL activities we are doing here, everywhere we are doing, and that is actually growing our customers also, because the customer churn is definitely higher because the loans are very short period. So it's like a treadmill. So new customers come, they take back their gold, we have to get new customers, and that's an ongoing process for us, because the tenure is very short. But then the advantage of a short tenure is that our yield, our returns, our NPS, etc. will not be there. So we are always in the market with activities, with advertisements also. We do advertisements also for maybe branding, etc. And local activities is there in all the 5,000 branches. So that is how we keep the new customer growth.
So sir, just a follow-up question on that. Have we tried to relook at or revisit the key responsibility area of our employees so that, this momentum on new customer acquisition can also be sort of improved, or the leakage that we have of the customer in terms of renewal of or maturity of loans that can be curtailed? So have we looked at or revisited the KRAs of our employees?
Yeah, I think this is a very operationally challenging business. The staff, etc., needs to be at the branch to take custody of the gold, control of the gold, safety, security. They have to be in the branch. At other times, we expect them to go out and do business also, but we don't expect them to be always outside, because every day there are such a lot of walk-ins coming to the branch for new pledges, interest payments, releases, etc. So staff has to be in the branch also. Security, safety also is there. But notwithstanding that, we have a marketing team, and occasionally the branch people also accompany them for marketing activities. So KRA is mainly their growth in the business in the branch. and some of it also to do marketing, and we have telecalling, etc. at the branch level itself. Branch level itself, a lot of customers ask them for new business, ask them for interest, ask them for renewals, etc.
All right. So just one last question on the Muthoot Money franchise. So if you look at the branch network has doubled in the last 12 months, and also the AUM. Just wanted to get a sense with respect to what does the loan book mix looks like in this subsidiary of ours.
Sir, the loan book today is about 800 crores. So the branches have also been increased. The loan book is also increasing.
The loan mix like versus of gold loan and vehicle loan in that category in that book.
A healthy mix of gold loan and vehicle loans. It's normally a vehicle loan company, but we have also started gold loan because gold gives better income also and shows a better quality of service. So we do a mix of both.
All right, sir. Thank you. And good luck, sir, for the next quarter. Thank you.
Thank you. A reminder to all participants, to ask a question, please press star and 1 on your touchtone telephone. Our next question is from the line of Kushan Parekh from Morgan Stanley. Please go ahead.
Hi, sir. Thanks for taking my question. I just had a couple of questions. One, just a data keeping question. Could you tell us what the auctions were for the September quarter, the auction amount? And also, if I could just put my second question as well. Basically, how should we think about in loan spreads and margins going forward, given that we're saying that cost of funds could increase from 8.55 to 9% over the next 1-2 quarters. I mean, will we be increasing our yields to also sustain our margins?
Yeah. The yield has been hovering around 18%. So 18% plus or minus 15 bits, 20 bits is what we have been seeing in the last 5 quarters. So the yield may remain like that. Although the CFO said that the cost of funds may go, that is for incremental cost of borrowing. But overall, probably we may not expect it to reach near the 9%, but a little more only. It will nearer to, not up to 9%. So some of it probably we'll be able to make up with better operation cost reduction, etc. But probably we may not be thinking of increasing our rates, etc., unless the cost of borrowing goes up substantially. We'll be able to maintain our NIM and yield.
Got it, sir. And the auction for September quarter, the auction number?
For December quarter, it is 381.
December 381.
And the September quarter, sir?
Coming. Hold on.
236 crores.
236.
276.
236.
236. Okay. Thank you, sir. That's all from me.
Thank you. The next question is from the line of Jigar Jani from B&K Securities. Please go ahead.
Yeah, hi, sir. Thank you for taking the question. Just one clarification. The incremental cost of borrowing, bank borrowing is 9%, right? That is what you mentioned, right?
It can come up to 9%.
It can come up to 9%.
Okay. And currently, it is on a blended basis, what would be the incremental cost of borrowing?
That's what 8.55, no? For December quarter.
Okay. So 8.55 is the blended as well as the incremental cost of funds. Okay. And sir, can you just repeat the accrued interest number? Sorry, I missed it.
1921. 1,921 crores.
1,921 crores. And sir, just corresponding to the previous participant, you had earlier guided for a 9 to 10% kind of spread range. Is that maintained over the guidance?
Yeah, I think this quarter it is 9.24, right?
9.24.
Yeah. So we will be near within this range even after the rate increase, cost of borrowing increase that we might do.
We'll try to maintain that.
Okay. Thank you so much for answering the question. And best of luck.
Thank you. The next question is from the line of Rajiv Mehta from Yes Securities. Please go ahead.
Yeah, so just two questions on Belstar. Can you give some outlook on Belstar's credit cost? And if you can also share stage 2 number for Belstar as of December and as of September.
Stage 2 or stage 3?
Belstar stage 3 is 1.9%.
The stage 2?
Stage 2 it is 1%, 1.03%.
Okay. And what will be the outlook on credit cost? Because we have seen a sharp jump in, PAR 90, stage 3 numbers, and provisioning has also gone up. Do you expect it to stabilize in this quarter or normalize a bit?
In fact, stage 3 has come down compared to last year.
On Q1Q basis.
Not on Q1Q basis. I think it is stabilizing. It's stabilizing in January. It's better.
Okay. Got that.
The funds are credit cost.
So in Q4, the early trends are that it is stabilizing, right?
Yeah, it's stabilizing.
Got it. Thank you.
Thank you. The next question is from the line of Vasu Jain from Marcellus Investment Managers Private Limited. Please go ahead.
Hello, can you hear me?
Yes. We can hear you.
Sir, can you tell us something about the branch openings that we have done? We can see 30 branches have been opened in standalone business. And can you share something on what is the RBI saying on further branch openings?
So, for the last year, this year 22-23, we opened 150 branches. Thereafter, we approached the RBI. They gave us permission to open another 114 branches. I think that's almost complete by this March or maybe early April. We should be able to open that also. Further, we will again approach for another set of branches. And that is an ongoing process. 150 branches a year is what we are doing now. I think it will be an ongoing process.
Okay. And we do not see any problem in obtaining the approval?
No, we have to convince the RBI. That is what our job is, to see that they are convinced about the company and its operations. And of course, if that is so, we don't see any issues there.
Got it. Thanks.
Thank you. The next question is from the line of Ashish from Infinity. Please go ahead.
Thank you, sir. Congratulations for a good set of numbers. Sir, I had one question in relation to the insurance brokers entity. We've seen the operating expenses jump up significantly. Any specific reason, or is there a one-off?
I think it should be a one-off.
And what would it be in nature of, sir?
I don't remember what.
Okay. Maybe we can get it offline from you.
Thank you. Our next question. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Kiran Engineer from CLSA. Please go ahead.
Yeah, hi sir. Congrats on the good set of numbers. Just a couple of clarifications on previously asked questions. Firstly, our SR book of 230 crores. If we recover, let's say 300 crores out of it, the extra 70 goes to the ARC or to us?
So the collections are divided. So the investment in SRs is in the proportion of 85 and 15. And the collections also are apportioned in the same basis. And collections over and above the SRs gets allocated in the form of 85 and 15. Of course, there is a certain cap which is there for the ARC.
Got it. Okay. That explains it. Secondly, did we have any interest reversals in this quarter or any write-backs? Last quarter it was 100 crore reversal, if I remember correctly.
So if you look at the numbers from September 30th to and compared with the December 31st, I think no, the NPAs have declined. So no, then there is no need for an interest reversal. So that is why there is a provision reversal because the NPA, the ECL provisions have come down.
Okay. So is it fair to say that the 100 crore reversal we had in September quarter, we did not have in December quarter? That is fair to say.
So, if you go deeper into it, there is always a reversal because it's not the same set of NPAs which get declared. It could be a new set of customers which is now shown as a NPA compared to September quarter. So the September quarter NPAs would have got maybe closed or major portion would have got closed, then a new set of customers. So at a loan level there could be reversals.
Okay.
This is what we are talking.
Understood. And just lastly on Belstar, we've seen this slight increase in NPLs. Is that because of the floods in Tamil Nadu or how do we read this? And also what are the key states for Belstar?
Belstar, I think Tamil Nadu is about majority. 50% is in Tamil Nadu. 50% is in Tamil Nadu. The rest South India, other South Indian, and probably.
Yeah, I think floods have got a small impact, but I think that's got corrected in the month of January. That's what we understand.
Okay, so did I hear that bulk of the book is in South India and half of the book is in Tamil Nadu state alone?
Yes.
Okay.
South Indian company.
Okay, that answers it, yeah. Thank you so much and wish you all the best.
Thank you. The next question is from the line of Shubhranshu Mishra from Phillip Capital. Please go ahead.
Hi, sir. Just wanted a clarification on the branch opening for 24 and 25. And do we get any incentives to open up branches in left-wing extremist districts? That's the first. Second is, sir, as per my understanding, we can do assignments of gold loans because they are bullet loans. But if we take monthly interest, can we do of the gold loans, sir? Thanks.
Yeah, so first question was about what should I say? Branch opening in
Special incentive.
Incentive for branch opening in which places, sir?
Left-wing extremist districts, LWE.
I don't know. We have not thought about such things, sir. No. Left-wing extremism. First of all, I don't know what is it.
Which are the states?
Which are the states?
Because some districts would fall into Telangana as well, sir, which could have large quantities.
No, I don't think there's any incentives for us there.
Anyway, before opening a branch, we do risk assessments, etc.
Second one was about monthly interest. What are you saying, sir? I didn't understand.
Sir, if the gold loans are on monthly interest, can we do assignment transactions for our gold loans?
I think so.
EMIs and monthly interest we may be able to.
Yes.
Okay. But that would be yield dilutive, right, sir, if we do monthly interest on gold loans?
That will be?
Yield dilutive.
Yield dilutive.
No, see, you have, whether it's gold loan as a product suits monthly payment is doubtful. So I'm not sure how far.
We have our loans are all bullet repayment and there is no EMI and monthly commitment for the customer. It's all EMI, it's all bullet loan and bullet repayment. That is why customers come and take a gold loan.
Anyway, it is a short-term product, so asking customers to pay on a monthly basis, how far it is accepted, we are not sure.
Sure, sir. Thank you. Those were my questions.
Thank you. Ladies and gentlemen, that was the last question for today. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
So, from the management, very happy that we were able to present a good set of numbers, and extremely happy that we had quite a few interesting questions and clarifications, and we hope that we have been able to clarify your questions. And from our side, we will ensure that the company does well and does well for not all its stakeholders, whether it's the shareholders, the lenders, regulators, everybody. That is our priority. So thank you very much for participating, and God bless you. Thank you.
Thank you. On behalf of Nirmal Bang Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.